Hey guys, welcome back. In today's video, I'll be sharing the euro-dollar trade which I took during the New York session, New York Killzone in particular. Now, what's interesting about this trade is that I took this trade 45 minutes post-news event. So there was inflation rate news that came out at 10:30 p.m. And I wanted to show you guys what made me take this trade. So let's get into it. So I start my analysis on the monthly time frame, and as we can see, price has been traveling, from June 2021 to September 2022. It's been making a big downtrend, and currently it's doing a bit of a run up. So if I put a Fibonacci tool here, from swing high to swing low, we can see price has traveled up and past the 50% mark. What I notice is that price is now in a premium. Also, there was also a fair value gap when price made the run up. So my bias is bearish because price has already traveled into a premium zone. It's probably going to want to come back down here and fill the gap. Right, so monthly it's bearish bias. On the weekly, I notice as well that there was this liquidity zone, sell side liquidity that has formed. Why sell side liquidity? Well, relative equal highs, and we can see that price has traveled up here 1 week, 2 weeks, 3, 4. So these are all liquidity grabs, right? And if we go down to the daily time frame, let's take that out for now. Fibonacci tool. Look, price has been going up, grabbing liquidity, consolidating, but overall, these little wicks are showing us that smart money is accumulating their positions. And on the daily time frame, we noticed on the 9th of May, yesterday, candle actually closed quite bearish. It closed below the candles that has formed in the past 2 weeks. So I was bearish on monthly, bearish on weekly, bearish on daily. So my bias is bearish. So I'm looking for price to go down. And let's just take this away for now. So I will put in my previous day high, which is also the buy side liquidity, and previous day low, which is the sell side liquidity, just to know what our levels are. So if you guys already know, or if you guys don't already know, I like to use this indicator called market sessions. It's FX market sessions by Boy Toki. So basically, this indicator will allow you to see what sessions are there, and it actually puts it on in your chart. So you can configure the timings that you like to do. These are the kill zones, which sometimes I trade. I mainly trade the New York and the Asian kill zone. So as we can see here, during the Asian session, price, this is the Asian low, and we can see during the London high, let me put that back, is here. So price, when it's traveling upwards, before it goes down, it will want to take out a little bit of liquidity before traveling downwards. It needs liquidity to move. So you can see here in the London session, if I just zoom in a little bit so you guys can see that it's made a big wick. So grabbing all the liquidity, those buy stops, and punching it downwards. So London and New York, they're notoriously known for smart money, really pushing price really big. So like the New York kill zone as well, with the news becoming a catalyst, you can see here they broke the Asian session low, grabbing liquidity, punching it all the way up. And where did it stop? It stopped at the previous day high of the 9th of May. So if we go back to the daily time frame, remember I plotted the highs of that day and the lows. And if we were on the 1 hour time frame, that's exactly where it went to, because support and resistance traders will put their stops here, or support and resistance traders will put their resistance levels here. So when I noticed that the bar stopped here, I went down to shorter time frames and I look at it more surgically to see what's happening. So our previous day high was this line, stopped there, went down to the 15-minute, which is here, made 1 week, 2 weeks, went on to the 5-minute, 2 weeks again. What made me really took this trade was what I saw on the 1-minute time frame. So remember, this line is our previous day high. Let's just put it there so you guys can remember. And what I notice is that on the 1-minute time frame, price has been moving on an upward trend. So high, higher low, high, higher low, high, higher low, traveling all the way up here. And look what happened. What do you guys see here? On the 1-minute time frame, there was this buy side liquidity, right? What's this wick? Price went up and took out this level. And what's this called? Market structure shift. So price made high highs, higher low, high, higher low, high, higher low, high, higher low, higher high, and broke market structure. And what happened? What did it create? Gap. Fair value gap. What else? You chuck a fib. Swing high to swing low. Where is it at? Surprise, surprise. Went down. That's the swing high, right? I should have put it here. That's the swing high. There's the swing low. Purge through the 50% mark. Price is in a premium. Smart money will always want to trade into a premium if it's a sell, and always into a discount when it's a buy. So just to reiterate, if you're on a bullish bias, price will travel up, go down, and travel up again. It will want to purge that 50% mark if it's bullish bias. Same thing, vice versa for bearish. Okay, so this is what has exactly happened. Price swing high, swing low, break the 50% mark. Price is in a premium. Market structure shift, fair value gap. Price has already filled it. Where do you think price is going to go? Down. So I took this trade. I placed this trade around, I think it's here. It was here. Put my buys, put my stops above this high here. And I think it was close to a 1 to 3 risk to reward trade. So I took off everything here because I'm just in for a short term. I just wanted to scalp this. But essentially, this was what I wanted you guys to see. So patience is key. I waited till price to travel to quite a sensitive area that was marked on the higher time frame. And trading is all about probability, guys. But one thing I wanted to show you guys as well is that, and I know I say this a lot, is that I only trade when I see things that come together. So liquidity rate, market structure shift, fair value gap, and the Fibonacci, swing high to swing low when price is in a premium or discount. That's when I trade. That's what I consider an A+ setup. So I hope you guys found this useful. And if you guys have any questions, drop a comment down below. Like and subscribe if you enjoy this kind of content. And I'll catch you at the next one.